Hi, Bill Bodner, Mortgage Market Guide. Thanks for tuning in to our MMG weekly recap. So the theme for our Mortgage Market Guide weekly newsletter is no news is good news. This past week, they were very thin as it relates to economic reports. The Fed is in their blackout period, so they're not saying anything for the week prior to the next week's Fed meeting. So the bond market followed the path of least resistance, which is higher in price, lower in yield. So here we are on a Thursday, and you could see this wonderful trend of mortgage-backed securities emerging over the past couple of weeks. We've gained, roughly 150 basis points in price, which is very meaningful as it relates to rates. And this happened just at this kind of like triple bottom, which is just a wonderful little trend. And we're cozying up to this 101 level, which is a little bit of price resistance. And it's also near this little price peak that we had a few months ago that proved very fleeting, right? We had this sharp decline, prices improved a little bit, and then they turned lower. So we're watching this very carefully. But there was no news this week outside of, let's just say, existing homes. And if you look at that number, it's unbelievable. I mean, the average home sold in about 18 days, 17.2% year-over-year price increase to both records. So just remarkable. And there just seems to be no relief on the inventory front, right? We had, I think, 2.1 months of inventory, which is just off last month's all-time low. So those problems are there. But I think as the economy starts to reopen, people feel better with vaccinations and stuff. Some inventory is going to come back, but right now it is certainly a seller's market, and we'll see as what happens over the next couple of months as things progress. But a couple of things that we're watching at Mortgage Market Guide. There were two interesting trends this week. Number one, stocks had some bad days where stocks moved lower. And, typically when stocks move lower, rates move lower. But we had not seen that at all, really, in much of 2021 because, rates have just moved higher almost, on their own. And so that dynamic that was normally in place never happened. But it happened this week. We had a couple of days where stocks moved lower and then rates moved lower. So it looked like money's finding the bond market, which is great, number one. Number two, we had an auction, 20-year bond auction. And those auctions of late have been having a tough time. But it seems like this month's auction, it actually did very well despite rates coming down, right? The previous 20-year bond auctions were doing poorly, and that's when rates were even higher than they are now. And so seeing rates improve and when stocks move lower and seeing rates improve in response to a good buying appetite is telling us that the inflation problem is no longer a problem. So now we're looking on to the next thing, which is the America's Jobs Plan. We have tons of corporate earnings next week. We have a lot of economic reports next week. And then we also have the Fed. Now, the Fed, in our eyes, and something we've been saying for months and months and months, they have our back. They are going to probably say we're not even thinking about raising rates or tapering. I can't even imagine them saying tapering, because when they do taper and when they do start or even saying they're going to taper, rates are probably going to move up in a hurry. So that's something to share with clients. But right now, I think the 30-year mortgage, is shown by Freddie Mac this week, is showing back beneath 3%. So you're going to have this wonderful tailwind going into this weekend. And I think overall housing looks remarkable. The housing, the labor department numbers are getting better each week. Less people are looking for unemployment claims. So it makes for going to be a great backdrop. It would just be nice to get some more inventory. But I hope this finds you well. Enjoy this wonderful market that we're in and the economy overall, and we'll be back at it soon. Bye for now.